Let's actually go across to Saurabh Mukherjea, who's joining us on the phone line. Saurabh, on top of that, Goldman saying that this whole coronavirus scare could potentially wipe out earnings growth this year. How much worse can this situation get?
I think, look, there are two different perspectives on it. One is obviously the global perspective and the Western perspective. Obviously, as the WHO has said, no country will be spared, and WHO has been categorical in saying no country should assume it will be spared. But our economy is less exposed to global trade than, say, a country like the United States. And whilst it looks all but inevitable that the Western economies plus Japan, Korea, China will face a major economic slowdown over the next 90 days or so, my reckoning is the impact on our economy is more muted. So if you look at the U.S. stock market, they're down around 10-11%. My suspicion is at a stock market level, we're looking at an impact which is roughly a third of that. The longer-term challenges, I think, are greater here. The short-term challenge around a 3-4% pullback in the stock market is, I don't think, the end of the world. I think the longer-term challenge will be a slowdown in travel movements, far more checks at airports. Even after the immediate panic and the immediate crisis subsides, I think we're almost highly likely to have far more checks at airports and slower travel movements. That obviously hits, say, sectors like IT services in India. But I think we should look at the silver lining here. We're highly likely to get lower oil prices. We're likely to see Western companies moving their supply chains away from China to other countries. And I hope and pray India seizes this opportunity with both hands. From a governmental level, we've got to roll out the red carpet for companies who want to diversify the supply chain. So yes, some stock market impact in the near term, roughly a third of what's happened in the US, I would suspect. But over the longer term, the impacts are more serious on our IT services firm, on our travel sector, on our hotels and airline sectors. But the silver lining is a potential macro boost as oil prices cool off and as global majors diversify their supply chains beyond, overt dependence on China. Let's hope that our southern states like Gujarat, Maharashtra, roll out the red carpet for foreign companies who want to set up manufacturing bases here.
Saurabh, completely take your point, and that's a good overview. But if we do see a threat of entering a bear market territory on Wall Street, how does this impact, the kind of flows, given the kind of risk-off environment we're currently seeing across global markets, and, the impact on us then on the back of fund flows pulling out?
Yeah, I've worked in India for now 12 years. I've seen very different types of markets. FII flows in India have been between 12 to 18 billion dollars. Higher end is 18-19 billion dollars. Roughly the number we've seen over the last 12 months. Lower end we've seen 10-11 billion dollars. So FII flows in India have been very steady through a variety of circumstances: economic boom, economic bust, different political regimes. So I'm not so sure that FII flows will suddenly disappear altogether. We've had around $1 billion and a half coming in most months over the last 10, 11, 12 years. I suspect the number will be broadly in the ballpark. Plus, the domestic inflows have become far more substantial over the last decade or so. So I don't think both the nature of our stock market and the nature of investor flows is such that I don't think there's a massive downside for the Indian stock market. The deeper impact is obviously the psychological impact of a pandemic like this, and the more human cost of having to deal with travel restrictions across the world, and specific sectors of which, as I said, IT services and travel and transport more particularly affected. So I don't think we should suddenly get into this fear psychosis that foreigners will pull out. If you're a foreign investor with a stake in HDFC Bank or a TCS or a Nestle, why will you suddenly pull money out of India? The impact on a large American company which has deep exposure to Asia, Europe, is more obvious, and hence the sharp pullback on Wall Street over the last 4 or 5 days.
Saurabh, in terms of strategy, and I know we normally talk more from a long term, but even if you were trying to get in and perhaps buy on dips for a longer term view, is this the right time, or would we still see further pressure on the markets?
Look, I've always sort of told people, don't try to do this buying on dips and market timing thing. It's very difficult to do, and I certainly have no competence in this. But if one takes a rational view of this, All the data suggests while this is more contagious than SARS, the virus is less lethal than SARS. The death rate is around 3-4%. And again, this is what China is saying. They've got on that they're past the worst of it. My sense is we're heading for a 90-day economic activity freeze in the Western world, plus the East Asian countries like Japan, Korea. And my sense is that after 90 days, especially as summer arrives, the potency of the virus will start waning. So looking at 90 days of natural psychological fear and fear psychosis around the world, if we are mature about this, there is no need to get overtly worried and sell stocks. And if you want to invest in the Indian stock market, this is as good an opportunity as any in high-quality, well-run companies, which have, whether we like it or not, which have very little dependence on trade flows as such. I wish we had a bigger export sector, but honestly, beyond IT services and elements of auto ancillaries, the export dependence of our country is relatively low. And hence, beyond that, I'm not so sure there's a massive, near-term impact as well. I think if we can get on top of our fears and stop correlating what's happening in the West automatically with India, we should be all right here. And buying, as I've repeatedly said on the channel over the last few years, buying high-quality companies in India, good cash flows, great management team, gives you solid upside exposure to the dynamism of the country.
Saurabh, the question we're debating here as well is whether or not this fall is a case of risk or volatility. What do you reckon?
I think this fall is more a case of people not understanding the extent of the issues associated with coronavirus. None of us really knows how exactly it spreads, right? Because we keep hearing of cases where Italians who had no exposure to anybody else with the virus and yet have contracted it. So in the absence of proper, clear understanding of how the virus spreads, obviously in the absence of a remedy for the virus, and with the transmission mechanism through trade and travel being pretty potent, investors, especially in the Western markets, are selling first and asking questions later. And that is but natural. I think if you just take a rational view of it, for better or for worse, our links to the Western economies are more muted, and hence the impact on our stock market looks likely to be somewhere around a third to what we have seen in the Western market. And if you again take this leap into if you take this fear psychosis further, I think it's highly, highly likely that, say, Fortune 500 companies will diversify their supply chains very aggressively over the next 12 months. And that's why I'm saying this is a golden opportunity for states, especially developed states with infrastructure in peninsular India, to grab this with both hands and seek a location of the Fortune 500 company factories in peninsular India, places like Gujarat, Maharashtra, Tamil Nadu, Andhra Pradesh. So the same fear psychosis which is making this a negative event for Western markets can become a positive opportunity for our country.
Appreciate your time and thank you for joining us.